Good morning, everybody. Last week, we took a look at savings and investment with the Investment Portfolio Project. But I would be remiss if I covered personal finance with you guys without covering credit. And that is what this video is all about. First of all, it's worth noting that with you entering college, recognize that you are very enticing to credit card companies. They're going to do what they can to throw offers at you that really you can't resist many times, right? Or that at least they hope that you can't resist. One of the big ones for me when they were on college campuses, which is very likely that you'll be facing these two once campuses open back up. They offer you free things, frisbees, T-shirts. For me, it was about the T-shirts. As a student supporting themselves through college, I couldn't resist. I signed up, didn't even fully realize what I was signing up for, and I ended up with a credit card. I didn't really have much of an understanding of credit, and that's something that I think most college graduates end up with. They don't really understand a whole lot about credit, but they definitely use credit. So before I go any further, I wanted to point out to you what it is that most college students regret most regarding their understanding of finances. And you can see here that 40% say that they most regret not understanding how credit scores work. And another 48% say that they most regret not being careful about debt or missing payments. This video really speaks to both. So please pay close attention and you will be better suited than 88% of your peers upon graduation. So how exactly are credit scores measured, or what's the scale that they're on? Let's start with the scale. Folks that declare bankruptcy, meaning they cannot pay any of the debts that they have outstanding, be it a mortgage, a small business loan, student loan, etc., they will ultimately get the lowest credit scores. So while legally they might not have to pay off those lending agencies, they'll also not be receiving any credit from anyone for up to several years. Folks, though, that might have a long history of being able to pay off credit, be it those same types of loans, auto loans, home loans, and the like there, will end up with much higher credit scores, which is why typically older people end up with higher credit scores. But what exactly are the components of a credit score? You can see here that the largest piece is your payment history. So let me ask you this question here real quick. Let's say that you end up missing your SMUD payment the same month that you ultimately miss your Verizon bill. Folks, that's a part of your credit history. And it's worth noting that credit scores will definitely be paying very close attention to that. You can see that it's among the highest weighted category of your credit score. But we'll focus more there as well as the others here shortly. Now, recognize that whether or not your parents are paying your credit card bill, whether or not you share credit with a significant other, your credit score and theirs matters, particularly when you're going for things together, like a mortgage many times, or a paying off your student loans. Mortgages, though, are the really big one here, which is why it's so important that you get clear with them regarding your relationship and understanding of money and debt, and make sure that you're clear on theirs as well. Doing that puts you in a lot better position in taking on those different types of financial debt obligations. Now, there are three major credit bureaus: TransUnion, Equifax, and Experian. Those credit bureaus, guys, are the ones that provide your credit scores. So when banks provide you a loan, or when credit card companies are determining whether or not to provide you this specific credit card, they are looking at the credit scores provided by these three credit bureaus. So they have enormous amounts of power that impact not only your ability to get a credit card, but your ability to get favorable terms on an auto loan, a small business loan, or a home mortgage. And the lower your score, typically the higher interest that you have to pay each month. So it is something that you want to pay close attention to, because the better your credit score, the less risk that you pose to them. So they're willing to give you far better terms. But let's break down each of these 6 components here right now. First of all, credit card use. If you have a credit card balance of $10,000 and you're only using $1,000 of that each month, and you're able to pay that off, you would be using 10% of or you would be measured at 10% credit card utilization. You can see here that 10% is on the lower side here, which is why it's still green. If, however, you max out your credit card of $10,000, you would be considered a far greater risk here. Hopefully, you understand why. If you take on more and more levels of debt, you're obviously a much greater risk to anyone that might be interested in potentially lending you money, which is why, again, you would end up with a lower score here and higher interest rates that you would have to pay on borrowing from them. Payment history. We already spent some time looking at this, so I'm not going to delve too deeply into it now, but recognize that 100% or zero late payments is ultimately what you're striving for here. You can see what exactly you need to know here or how it's calculated, but the short of it, guys, is simply do everything within your power to pay every single bill you have on time. Here, if you read this down below, you can see my wife and I's experience with this, where we ended up paying nearly $100 for one late credit card payment, and we've already received notice from the lending agencies that our credit score took a hit because of that one late payment. So I cannot stress that enough, and you can see that here that payment history is weighted very heavily, high impact. So was the last one with credit card history there. So credit score, the credit card use, as well as the payment history both have high impact, which means that these are very heavily weighted categories in your credit score itself. The third high impact area of your credit score is what's referred to as derogatory marks. None of you are going to have derogatory marks yet on your credit, but you do have a credit score, and it is worth noting that right now you're average, right? But let's say you're able to build up some of that credit. You get some credit cards, you get a mortgage, but you can't pay off your mortgage. Financial distress hits both you and your partner there, and you're forced to walk away from your home. You ultimately default on it, okay? If you default, that is obviously considered a derogatory mark. If you own a small business and it fails and you are unable to pay back the bank for that small business loan, that would be a derogatory mark on your credit, which is why that is weighed very heavily as well. So high impact on that credit score. The age of your credit history has a medium impact, but it is still important for one key reason. If you have one particular credit card for 20 plus years, that's 20 years that the lending agencies can see that you have an ability to pay off that credit card consistently, which is why 9 plus years is viewed very positively here. The person here has only had their credit card for 6 years, and that ultimately is viewed moderately here by credit lending agencies. So this is only a slight knock. This might keep them out of the 800 range of that credit score. Total accounts does as well, though. And what's interesting here is I want you to pay attention to the question, is more better? You can see here that someone with 21 different lines of credit open is viewed the best by the credit bureaus there. 21 lines of credit, so that's like a small business loan, that's a home loan, that's an auto loan, that's maybe student loan, that's multiple credit cards, up to 21. Am I encouraging you to have 21 lines of credit open at a time? No. I would encourage you to have no more than one credit card and maybe one mortgage there, which would ultimately put you still at the 0 to 5 category here. Maybe you're still paying off your student debt at 3, but goodness, 21 plus, not so much. But what they're ultimately saying here as well is let's say you end up with one credit card that you got at 18 and you find that it no longer serves your interest. What this is ultimately saying is rather than cutting it up and closing it out and being done with it, maybe hold on to it, put it in a drawer that in the back that you would never use again, but it's still open there. I don't know whether or not I agree with that, but that is something to consider based on what it is that you're seeing here. Your next one here is hard credit inquiries. So that term might not be terribly clear, but what it ultimately means is that anytime you apply for a loan that's providing you with thousands of dollars, that would be considered a hard inquiry. But there are a number of soft inquiries that occur with you for you as well. So for instance, if you apply for a rental agreement or a cell phone package or a gym membership, every one of those are going to check your credit score on that. Those would be considered soft inquiries. And the reason why is that you are not asking for thousands of dollars in loans at that point. They're simply needing to trust that you can pay these, pay off your bills each month in those specific instances. But it's a hard inquiry if you ultimately look into loans of several thousands of dollars. Now, the ideal here you can see is 0 or 1 to 2. But some folks need a number of loans here. Maybe they're opening up multiple businesses or opening up new resources for their businesses there. And that might be further up. Recognize, though, that that would be a low impact factor on your credit score. So, folks, those are the main criteria credit bureaus use in scoring your credit. But before we go any further, let's take a look at, all right, now that you understand a little bit more about credit scores, and you don't have to have that as a regret when you graduate from college, it might be time to look for, all right, well, what sort of credit card am I going to want? Maybe you already have one, but it might be worth looking at other credit cards to see whether or not your specific credit card's the best for you. I would encourage you to pay attention to a few major factors here. One, APR. Recognize that anytime you carry a balance from one month to the next, you are paying interest on that. So the higher that APR, the higher interest you are paying on borrowing that specific money from month to month. The annual fee is pretty obvious there. Some credit cards have an ability for you to waive that fee if you meet certain criteria. Maybe you have a checking account at their bank. Also, I would pay attention to rewards. There are a number of credit cards offer you cash back, but many times that cash back is tied to your making purchases at specific types of businesses. So pay close attention to that and making your purchase here. Now, what I would recommend in making that decision for those credit cards is to take a look at websites like Bankrate.com, NerdWallet.com, or WalletHub.com. The above information is from WalletHub.com, and I think it gives you a good chance to kind of see what it is that they're offering here. You can also check these boxes here and compare these different credit cards side by side so you can make an informed decision, which is obviously what I recommend. Let's look at what happens when you only make the minimum payment each month on your credit. So let's assume that you made a purchase that was $2,000 here, $1,993.71. If you only make the minimum payment on that, okay, which is only $25 on your bill, that will take you 11 years to pay that off. And in the end, you will have paid almost double the amount of the original purchase price, okay? Not exactly the best move for you to do. If, however, you're able to make a $69 payment on that credit bill each month, okay, that will take you less than a third of the amount of time at 3 years, and you will have spent $2,500, okay, saving $1,200 here. But also ask yourself this question. What if you determine I'm only going to make purchases on the credit card that I can pay off that specific month, okay? If you're able to do that, okay, determine what your savings would be from then. In other words, if it's $1,993 and you can pay it off that month, well, maybe you don't even have this much to pay. My suggestion then is obviously pay the full balance every month. You can see that this is a poll given to the entire American population, okay? Or at least the sample size here of 408 respondents, and the majority here pay off the full balance. The reason why is that they do not want to pay that interest each month. That's the biggest determining factor. Interest matters, folks, because last videos we took a look at stocks and mutual funds and making compound interest where like $100 could be worth hundreds of thousands after several decades. Credit card companies work the same way, that they use what's called compound interest. Compound interest works in your favor with stocks and mutual funds and bonds. It works against you very negatively with carrying a balance. So I would encourage you to only make those purchases where you're able to make those payments each month of the full balance because of that reason. That way, you can focus on the rewards themselves. A third here take a look at the rewards, or nearly a third, whereas the majority here take a look at interest rates. Well, the third here that are looking at the interest rates know that they're carrying a balance each month. And what that means is that you're taking a few years to pay off purchases that cost $1,000 or more, right? But if you focus on paying off the full balance each month, which is what I'm recommending to you, you can focus more on the rewards. And if you're making credit card purchases and you're able to pay off those balances each month quite effectively, you could earn several $100s cash back from a number of credit cards that provide that. So keep that in mind when you're looking at those credit cards. I'm going to go ahead and end there, guys, but I hope you found this informative and that you don't have to graduate from college regretting what you didn't know about credit. Thanks so much for your time and have a great day.